Hello, everybody. My name is Stefan Choi. Welcome to Trading with Livevol. This is where I trade my Reg T account, and I use LVX to trade. So this kind of got messed up here. Let me actually put this straight. So nothing too much is going on, except the market is pretty much giving up most of the gains it made yesterday. So yesterday we had this day, and then if I updated, it went straight down. Unfortunately for me, I bought calls at the end of the day because I actually thought we're going to have like a continuation. Because we had a continuation here, here, once it broke the 7-day moving average. But it didn't happen. So I had to get out this morning. Just show you. Yeah, so if you look at my SPY, basically I bought 100 contracts at the end of the day, and then basically I had to roll out of them. I lost $3,700, which is pretty, it's pretty bad. So not too happy about that. Voyeur is giving back most of its gains. The biggest thing is the US dollar. Looks like it's pretty much right now unstoppable. As you guys know, I buy UUP, but if you guys wanted to look at the US dollar, you would look at the USD right here. But anyway, so it actually looks like it could go higher. I talked about it before, where it's like it's actually these lines become sharper, the angle of ascent, and at this point it can pretty much shoot straight up, and it looks like there's really nothing stopping the dollar. This coupled with the oil prices going down, looks like it had a negative effect on the marketplace. Even though, if you look at the long-term beliefs, having a strong US dollar and lower oil prices is, I think it's better for the country because we're a net importer as a nation, and we basically are a net importer of oil, right? So basically those two combined, overall for the whole macroeconomics, it seems like it's better in the long run, but in the short run, obviously there's a lot of algo trading going on, and as the dollar moves so sharply, you're going to have some adverse effect on the U.S. market. That being said, the German market is rallying, so I've been waiting for the sell-off to buy, and basically it's not giving me a chance. Same thing with UUP, same thing with HEDI. So all these that I was bullish on, that I was trying to buy on a drop or retracement, it's not really happening. So I have to see. I'm really tempted to chase it, but I'm kind of preventing myself from doing it. But it looks like the US dollar is going to go higher. A couple of interesting notes that I want to show you guys. There seems to be, now I told you guys how I ended up basically buying my shares back, which I'm glad I did because it's up 50 cents or 30 cents since 41 cents since I've done that. And basically I replaced it with these puts. But as you can see, there's more put here. It could be a hedge, or basically it could be a downside speculation. In either case, it's 3 cents, and depending on what the Fed comes out with. So if the Fed comes out next week, pretty much says they're not going to raise interest rates, or keeps the the wording patient, you might have a sharp sell-off in the dollar, and this might gain a bump. Even though right now the dollar's moved up so much, these were only $0.50 away when we started. So it might almost make sense to start buying the March 26 puts instead of the 25.5. But you know, that'll depend. So you can see some more activities over here in that. The other stock I want to talk to you about is this high bond yield. So a lot of times at the early beginning of the year, people are talking about this bond yield. So at the December, when we had that sell-off, this corporate bond yield were getting sold off very sharply. And a lot of it had to do with the energy sector because they have a lot of bonds that people were afraid were going to implode. But it recovered and looked like everything was good to go. I'm seeing some sign of weakness. So today, I was looking at the order flow and look at the April order flow. So you see all these puts trading right here, all of them out of the money mostly. So maybe people are speculating there is going to be some serious problem with some of these bonds, high yielding bonds, if oil prices continue to go down. So like I said, oil prices were down sharply. iShares box high yield corporate bond ETF, that's what HYG is. And if you look at it, you can see the second biggest exposure is in energy, and it's about 14% of the overall percent of the market value. So if these companies start imploding and these bonds starts the default of these bonds start increasing, HYG will have a pretty adverse effect on it. So my thinking is it's why people are buying these puts right here. It might be worth it to buy some puts. If you look at how far it went last time, so last time it went all the way down to like 85 bucks. So if you think like the oil's going to sell off for another month and we might actually have another like sharp sell-off, which I think might happen, maybe you might want to consider buying some April puts like these other guys. So it's funny how, I was looking at the charts, I was looking at the oil prices, and basically the consensus is that we will run out of storage sometime maybe in April or May. And it's, it's curious that people are buying these options. So like if you look at it, you can see a lot of them are spreads. So you can kind of go and investigate all these trades. But the fact that everyone is accumulating these spreads makes me want to buy some kind of spread myself, right? So, maybe the right spread might be maybe 88, 85, right? So the 88, 85 spread looks like it's about 35 cents. And if HYG just does fall, it's going to turn into $3. So you're going to make pretty much 9 times your money on this trade if you can get it for 35. So let's say let's say 35 is good. I'm going to try to buy 25 of these. All right, so now I have this order out, and I'm trying to buy the 88, 85 put spread. And essentially, I'm piggybacking the order flow, but also I know that they had the sharp sell-off in December because of all the bonds in the energy sector. As oil prices drop, essentially some of the collateral which is essentially oil, is going to be drawn, marked down, which is called, we might call it like a margin call. So essentially, like as oil prices drop, your collateral becomes weaker and so forth, which might force you to sell actual, like real land or real commodities or anything to basically cover the margin. So my thinking is 85 might be where it might end up going. You might even do like 85.5 maybe, around there, 86. If you don't want to sell the 85, you can also do 85, 86, and that's 27 cents, and then you make roughly 8 times your money, little under 8 times your money if you're correct. You can even put in a 25 bid maybe, right? So I have these two orders working. Essentially what I'm betting on is that HYG will fall because oil prices would fall, thereby causing the same pain that happened in late December, and so that's kind of what I'm betting on, right? So I'm betting on that, and if I'm correct, I have a good chance of making 8-1, 9-1 my bet or my trade, and if I'm wrong, essentially I don't think it'll go that much higher due to the fact, unless the oil prices go up. So I think the upside is kind of limited as oil prices is limited to the upside. So that's that's pretty much it. I'm disappointed that the market didn't go up, but essentially I'm gonna just have to hang in here. So as you can see from this day, so in 3 months, if I look at my 3 months worth of trading, yeah, I'm up 42 grand, but basically I've lost 16,000 since beginning of February. So I really haven't been doing that well. I did well at the beginning, but not doing too well now. So I'm hoping like I'm gonna catch fire again and get on a streak, and maybe this will go up. But until then, I'm just gonna have to suck it up on the losses and try to make money a little bit here and there as much as I can. So I hope your trading is going well. I will talk to you guys on Monday, and it'll be interesting to where the market goes on Monday. But I think maybe the experts might be correct in terms of the market kind of not really moving either way until the Fed announces their decision next week. So take care, have a nice weekend, and I will talk to you guys on Monday.